Have our guests now joining us on the show. We have Harsha Upadhyaya, CIO Equity at Kotak AMC. Hi, Harsha. Good afternoon. And we are almost at the fag end of the earnings season. No doubt, most of the part of 2025, we've only focused on what exactly is happening in the United States, the commentary coming in on tariffs. But yes, earnings play a crucial role. And what do you make of the earnings scorecard now?
Good afternoon. Clearly, when we started the earnings season, the expectations were quite muted across the board. Whether you look at large caps, mid caps, across the board, the expectations were quite muted. Off late, we have seen a little bit of a better earnings trajectory coming in from most of the results that have been announced in the last week or so. But overall, I would say that we are broadly in line with expectations. Maybe it's slight bit of improvement versus the muted expectations that the street had at the beginning of the quarter. Overall, I do not think that the earnings season by itself is going to be any trigger either on the positive side or on the negative side for the market as of now.
Hi, afternoon. What's it that you're making of the overall market, though? Seems like it's picture perfect. The good news couldn't get any better than here. But do you think, in terms of valuation, much of the positives are already baked in? How much more headroom could the market have from these levels?
You're right, Aisha. I think a month back, there was complete panic in the market. And from that level, it swung to complete euphoria, one could say. I think the reality is somewhere in between. And as of now, the valuations are quite on the higher side, I would say. Even the large caps probably are at a premium of about close to 15% to their long-term averages. And of course, mid and small caps are even more expensive. While the overall sentiment, the mood, and the liquidity also seems to be quite positive, one should keep an eye on valuations. I think as markets move up from these levels, if there is no further earnings support that comes in, then I think it's going to be difficult for the markets to sustain those levels once the sentiment changes or the liquidity kind of cools off. That's what probably we need to remember.
Harsha, what one is seeing is that the completely disowned segments of the market as well are now making a comeback. Look at what's happening within railway stocks, for instance. Look at the PSU pack, the larger periphery, other than just banks. They're also now beginning to participate. Tell me, where is it that you find value or bottom-up opportunities right now?
Aisha, with markets trading at probably almost like 22 times 1 year forward earnings, it's very difficult to find attractive valuations across the board. There are probably very few stocks which offer you that kind of valuation comfort. However, if you look at our portfolios, we have been focused more on domestic businesses over the last a few quarters, and of course, that positioning has played out well. And also, we believe that going forward for the next couple of quarters, still for exporters and global-oriented businesses, the situation is going to be quite hazy. So to that extent, most of our exposure would be in domestic businesses, including financials, for example, which is a large exposure. Other than that, we have been positive on cement, telecom, power, oil and gas, all of these segments, which have very few linkages with global markets. And if at all, that's been a positive. For example, the crude oil has corrected quite a bit. That should be a positive for at least the downstream oil companies in our view.
What's on your watch list? What I'm trying to get to is this the time that one needs to tread with caution? I understand that you can't put fresh money to work, but do you need to profit take at these levels? Is there something which could actually spoil the party for the markets from here?
I think even now we have not seen the last of the tariff announcements. So to that extent, I think it's still wide open in terms of what's going to happen to overall tariffs for the country and also to specific sectors. So to that extent, I think we need to still watch out that part of the news developments. As far as the valuations are concerned, as we discussed earlier as well, they have moved up and they have moved up quite rapidly. So to that extent, at higher valuations, obviously, you need to be cautious and mindful of those valuations as well. So overall, I would say if you just look at the mood and the sentiment, things are fine. However, we need to keep valuations also at the back of our minds and start taking corrective actions if required from those segments where the valuations are relatively more expensive.
Frothy to you, Harsha, right now? Where is it that you would tread with caution sectorally?
Sectorally, I would say we would still be concerned about some of the global businesses, including the exporters. I think that's where the business itself is still under some sort of a transition, I would say, depending on where the tariffs would head, where US growth and Western world growth is going to head. You're going to see a business momentum changing. So to that extent, I think there are too many moving parts as far as those businesses are concerned. While we do hold some of those positions in our portfolio, we are unlikely to really build upon those positions at this point of time until we get more clarity.
Okay, Harsha, stay with us. Lots more to talk about.
Harsha, let me come to you and let me get your view on the textile space if you track that closely, because if you look at that entire space, there seems to be a lot of upside that is still pending to take place in the textile space, given the fact that they've underperformed also pretty significantly. Do you think there is some sort of a valuation comfort? Are you viewing that space like that right now?
We have seen some bit of up move in the textile segment in the recent times, but there is a medium to long term opportunity coming up in case India, on a relative basis, compared to some of the other competitors from South Asia or Southeast Asia, happen to have a tariff rate which is lower than some of those peers vis-a-vis peers in case of US exports. If that were to happen, I think there is going to be a large opportunity that can be captured by Indian textile manufacturers, and also the margins are going to be relatively better in that sense. So yes, there is a medium-term opportunity in front of us, but we need to see how some of these tariff discussions go and where it would settle, not only for India but also for some of the other peers, from the Southeast Asian region. So overall, we continue to monitor this, and once we have more clarity on the overall tariffs in this sector, then we would probably take further